guys, welcome back to the channel. My name is StockRock. Today I want to talk about a name that reported Q3 2026 earnings in a crowded customer engagement and marketing automation space. Some of the competitors include Hubspot, which is down almost 50% for the past year, CRM stock, which is down about 26% for the past year, Adobe stock down about 37% for the past year, and Klaviyo, which is also down about 27% over the past year. This stock is Braze. This company is down about 27% over the past year as well.
Personalize your campaigns? The Braze data platform unifies, activates, and distributes data in real time, empowering you to create inspiring, multi-channel experiences without relying on technical teams. Unify your first-party data with 150+ integrations, including your warehouse, CDP, e-commerce apps, and more. Capture consumer behaviors, preferences, and insights through our powerful SDKs and APIs. Merge duplicate profiles to create a complete view of your customer and turn unknown interactions into meaningful connections. Zero-copy integrations activate your data directly from the source, allowing you to create precise audiences and deliver personalized experiences at scale without needing to copy anything over. Plus, clean, organize, and manage your data to create campaigns that deliver results. Analyze performance and unlock insights, and use your data to create exceptional experiences with Braze AI. Distribute engagement data securely across any system, unlocking its potential within your entire organization. Dare your data to work harder with the Braze Data Platform. Visit braze.com/data to get started.
Now let's break down what happened in their earnings. As for the top line, revenue beat by 25% year over year. The revenue breakdown is about 90% of their total revenue, which is a subscription-based model. Year over year, customers increased by 14%, and for customers with over 500,000 in ARR, increased 29% year over year. Margins for both GAAP and non-GAAP did drop slightly, but nothing too relevant or significant. Profitability for this company, operating loss of $37.5 million, partly due to $37.6 million in stock-based compensation, which is a bit concerning. On a non-GAAP basis, they came in with operating income of $5.1 million versus a non-GAAP loss in the same quarter of the prior year. Braze is growing top line very strongly at 25% year over year, adding both new customers and significantly growing its large customer base. Non-GAAP profitability has returned with positive free cash flow, which is a key milestone for the business. However, some pressure on margins and net retention, slightly down, suggests that clients may be more budget conscious at the moment and less expansionary. The large RPO backlog suggests good visibility into future revenue, but margin decline and GAAP loss remind us that stock-based compensation and investment continue to weigh on true profitability. So as mentioned, Braze does compete in a very crowded space with Salesforce, Adobe, Iterable, Klaviyo, HubSpot, the list goes on. Where Braze is strong is unified cross-channel messaging, real-time user data, better for mobile-first and app-based businesses. They also possess developer-friendly APIs, flexibility, and the ability to scale with enterprise-grade needs. Where Braze will see the challenges is from companies like Salesforce and Adobe, which offer deep enterprise CRM and analytics and marketing integrations. Personally, this is not a space that I'm going to be investing in, but a company I just looked at their earnings, and this is how you can really add a stock to your watch list to potentially invest into the future. But personally, I'm not investing in this space. I don't see this as a space I'm interested in. But yeah, hope this was helpful. Thanks for watching. Peace.